In this video, we're looking at Google stock. We will look at some of the numbers. We will look at the recent 10Q report. We will look at the recent developments in the recent quarters for Google. And then at the end, we will try to come up with a fair value, the ranges of fair value for Google based on the analyst projections. So we will come up with 3 scenarios for the valuation of Google to see if Google is a good buy at this price level. So let's get started. First of all, soon 13F filings will be available. I will be making videos on super investors' portfolios. Warren Buffett, Terry Smith, Michael Burry, Seth Klarman, and many others. So if you have favorite super investors and you want to make a deeper dive on their portfolios, or you have other investment ideas, please write in the comments below. Okay, we will look at 3 reasons why I believe the shares of Google are undervalued and a good buy after the recent 10Q report. If we look at their chart year to date, we can see that the stock is down 36% year to date, while the S&P has done better. So the shares are down after the report also. So what were the recent developments in the recent 10Q report? If we look at the recent 10Q report, we can see that the revenue in the recent quarter was close to 69 billion. This is a miss of 1.5 billion from analyst projections. So the revenue is up 6% year over year. So this is much lower growth rate that analysts were projecting. So if we look at the revenue for the last 10 years, we can see that the growth rate in the revenue was much higher in the previous years. So many investors believe that Google is a maturing company, and as a result their growth rate is getting lower and lower. So we can see much lower top line number, the revenue, in the recent quarters. Also, the earnings per share was close to $1. This is a miss of 19 cents. Okay, what was the reason for such low numbers? If we look at the revenue by segment, we can see that Google services grew only around 1.5 billion. And YouTube ads saw a first decline in the revenue. So I believe this is the first decline for YouTube ads in history. So we can see the downturn of the economy. As a result, we see lower spendings on advertising, and this is visible in Google numbers. While the positive sign was that Google Cloud saw a much higher revenue that analysts were projecting. So now let's look at 3 reasons why I believe that the shares are undervalued. The first reason is Google Cloud. As we saw, Google Cloud revenue was higher than expected. So if we look at the top 3 cloud platforms, we can see that the first one is from Amazon, AWS. The second one is Microsoft Azure. And the third one is Google Cloud. So Google Cloud is top 3 cloud platforms. They have around 10% market share. Their market share is increasing over the years. So I believe that Google Cloud, while now is unprofitable, this may change in the future. And the revenue that comes from Google Cloud will represent a much higher percentage of their total revenue. Also, Google have means for advertising that can boost the market share even further for Google Cloud. So I believe this is one of the most prominent segments of their business. Their market share will increase over the years and again represent a much higher percentage of the revenue. So the revenue for Google Cloud grew 38%. Their operating margins were also higher. So Google Cloud, while still unprofitable, is getting closer to profitability. Okay, the second reason is that Google constantly repurchases its shares. They repurchased close to 15 billion worth of shares in the recent quarter. They have close to 44 billion of shares buybacks from year to date. So this represents around 3% from their total market cap. Considering that they have close to 100 billion of cash on their balance sheet, they have more than enough financial capacity to continue repurchasing its shares. As Warren Buffett famously said, if they keep doing that, I will be the last shareholder. So the shares buybacks may add additional value for shareholders. Okay, the third reason is their valuation. So even after the lower growth rate for the revenue in the recent quarters, I believe the shares have still significant upside potential. So we will look at three scenarios. The first one is the negative scenario. If the growth rate will be close to 8%, analysts are projecting the revenue to grow around 10%, so this is lower than analyst projections. If we use 8% growth rate, we use price to earnings of 16, so this is the price to earnings right now. What we basically do is that we take current earnings per share, grow them using the growth rate, multiply by future price to earnings, discount them back to today using the required rate of return of 10%. As a result, we get the fair value of Google stock of close to $88 per share. So this means that the shares are currently 5% overvalued. So this was the negative scenario. In the basic scenario, if we use the growth rate of 10%, so this is in line what analysts are projecting for the growth rate to be in the next years, in the next 5 years. If we use price to earnings of 20, so this is much lower than the average price to earnings of Google for the last 5 years. So if we use the growth rate of 10 and price to earnings of 20, we get the fair value of Google stock of close to $118 per share, which represents around 27% upside. So this is the basic scenario. The growth rate is in line what analysts are projecting. Okay, and the third scenario. So if Google revenue grows more than 10%, which I believe is very likely, considering that they have high growth rate in their cloud business, also if we see better economic conditions and we see higher spending on advertising, this is again very likely. So if we use the growth rate of 12% and we use the price to earnings of 24, which is again much lower than the average price to earnings for the last 5 years, we get the fair value of close to $153 per share. So this is the best case scenario. So in the negative scenario, if the growth rate will be close to 8%, we can see a negative upside of 5%, 27% upside in the basic scenario, and more than 64% upside in the positive scenario. Okay, in this video we looked at Google. One of the main catalysts may be Google Cloud, which has a much higher growth rate than their advertising business. Another catalyst may be their stock repurchases. So if Google is able to grow their revenue more than 10%, it has a very significant upside potential. Also, it will be very interesting to see what super investors bought the stock in the previous quarter. So again, I'll be making videos on super investors' portfolios. Also, if you want to know more about other stock investment ideas, here's the video on Warner Brothers Discovery, a significant upside potential there. If you are not subscribed to the channel, you can do this by pressing the button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.